All right, let's get right into it. Today, we're going to unpack the latest earnings report from Xenia Hotels Resorts. They're a huge name in the luxury hotel game, and we're going to decode their 2025 performance to see what it really tells us about the state of travel today.
And to do that, we're going straight to the horse's mouth. Everything we're talking about today comes directly from this document right here, the company's official full-year 2025 results. This is our blueprint for today's breakdown.
You know, a report like this raises a really important question. It's more than just a spreadsheet, right? It's a window into where people are traveling, how they're spending their money, and how a company like Xenia plans to navigate what's coming next. And that's exactly what we're here to figure out.
So, here's our game plan. We'll start with their 2025 scorecard, then we'll dive into the strategy that made it all happen. After that, we'll look ahead to their forecast, and finally, we'll connect all the dots to see the big picture. First things first, let's decode that 2025 scorecard. We're going to look at the key numbers that really defined their year.
But before we get to the numbers, there's one term you absolutely need to know: RevPAR. It stands for Revenue Per Available Room. Basically, think of it as the hotel's average income for every single room they have. Doesn't matter if it was sold or empty. It is the #1 metric for a hotel's financial health.
Okay, with that in mind, let's look at this. Adjusted funds from operations, or FFO, per share, it shot up by 10.7%. Now, FFO is just a fancy way of measuring the actual cash flow a company like this generates. For investors, it's a huge deal. And seeing double-digit growth like that, well, that's a very strong signal.
Next up, an 8% jump in total RevPAR. And that word total is so important here, because this isn't just about what they made on the rooms. This includes everything else: the food, the drinks at the bar, the big catering events. An 8% increase tells you that guests weren't just staying, they were spending a lot.
So what was the secret sauce behind that 8% growth? Well, the data tells a really clear story. Big group events came roaring back. Group room sales jumped almost 13%, which is great. But look at this, a massive 17.2% explosion in banquets and catering. This means conferences, weddings, corporate meetings, they were back in a big way. And that business is incredibly profitable.
Okay, so those were the results. Awesome. Now let's get into the how. What were the specific strategies that made this happen?
You know how every team has a star player? Well, in Xenia's portfolio for 2025, one property absolutely stole the show: the newly renovated Grand Hyatt Scottsdale.
And this just perfectly shows the power of making a smart investment. After they poured money into a huge renovation, the Scottsdale property saw its RevPAR grow by a jaw-dropping 104% from the year before. One hotel became a massive growth engine for the entire company. Wow.
But Xenia's strategy wasn't just about making their existing hotels better. It was also about being incredibly shrewd about the properties they decided to let go of. This is where smart portfolio management really comes into play.
Take a look at the sale of the Fairmont Dallas. They sold it for a cool $111 million. That's a great payday. But here's the genius part. By selling it, they also avoided having to spend $80 million on renovations that it needed. So they got cash in the door and dodged a massive expense. That is a brilliant move. And they didn't just sit on that cash. They put it right to work. The company bought back over $120 million of its own stock, which is great for shareholders. They pumped another $87 million into upgrading other properties. And they even bought the actual land underneath one of their hotels in Santa Clara to lock in their future. These are moves of a really confident company. So that's the story of 2025, a really strong year. But what about the road ahead? What does Xenia think 2026 is going to look like?
This table lays out their official game plan. They're forecasting a solid 3% growth in RevPAR. And that super important metric we talked about, adjusted FFO per share, they're expecting that to grow by another strong 7%. It's pretty clear they believe this positive momentum is going to continue.
So what's giving them this confidence? Well, the report calls out a few key tailwinds, or positive forces. Group bookings for the rest of the year are already pacing about 10% ahead. You've got massive events like the FIFA World Cup coming up, and here's a big one. There just aren't a ton of new hotels being built in their key markets, which means less competition.
But, it's not all blue skies. The company is also being realistic about the challenges, or headwinds. They're expecting wage and benefit costs to climb by about 6%, and that's going to put a squeeze on their profits. And then, of course, there's the big one, just general uncertainty about the economy as a whole.
Okay, so we've looked at the past, we've seen the present strategy, and we've peeked into the future. Let's zoom out. What's the big picture takeaway from all of this?
When you boil it all down, Xenia's strategy is incredibly clear and disciplined. They are laser-focused on one thing: owning premium, high-end hotels that attract corporate groups and travelers who spend more money. This is not a volume game. For them, it's all about quality.
And that focus gives them a ton of confidence. This quote from their CEO, Marcel Verbas, really says it all. They truly believe that their collection of hotels is perfectly set up for major growth in the future.
So, if you had to sum up the story of 2025 in one sentence, this would be it. Xenia made smart bets on its properties, and those bets paid off big time as they perfectly captured the powerful wave of returning group travel.
And that leaves us with this one big question as we look ahead. Their strategy of focusing on the high end was a home run in a recovering market. But will that same premium focus be a strong enough shield if those economic storm clouds start to gather? That is the multi-million-dollar question for 2026 and beyond.